Hey everybody, hey traders, Chris over here. Welcome back to another installment of the Keep It Seriously Simple video series, where I'm helping traders of all ability levels in any financial market trade to be more consistently profitable. The education I'm providing in this lesson is actually part 2 of a trading mindset and trading psychology session. And so I want to talk about a couple of things where I left off, which was showing you the first tool that I looked at to really set my vision of what I'm going to be as a trader, who I'm going to be as a trader. That is a profit calculator. Also looking at compound investing, compound investment calculator. There are free tools and resources. I will include them in the description for this video as I did with video 1. So check those links out. As you're in your way clicking through that description and reading the notes, make sure you click that like button for me on the YouTube channel. I appreciate that. So let me go ahead and get myself out of the way here, and let's talk about this old profit calculator. I will show you what it looks like. I'll tell you the story behind it, what it did for me mentally, and either setting good or bad expectations. I'll get to that in just a second. Also, compound calculator, because now I'm at a point where I am thinking 3 to 5 years down the road. I'm thinking 5 to 10 years down the road. I'm trading for the entire year. My job right now is not to be profitable today, but to be profitable this month, to be profitable for the quarter, to be profitable for the year. I know that I can make my living from January to December. I don't have to be perfect, in one single day or one single week. I can give myself that freedom to take the best possible trades and have the most profits I can and take advantage of all the ripe opportunities throughout the trading year. And with the markets that I trade between stocks and Forex and cryptos, that's a pretty diversified, offering. There are plenty of opportunities to take advantage of. Automate when you're confident. That's a little point I want to talk about as well. So it has taken me, I've been trading now between stocks for nearly 20 years, options for the last probably 5 or 6 years, Forex for the last 12, cryptos for the last 3. I've been in the markets for a long time. It's taken me a long time. I've had friends that have been in the markets, so same amount of time that I have, that have been incorporating automation with their trading for the last probably 7, 8 years, which to me is incredible. And I've always been astounded and kind of mesmerized by the thought of letting robots trade for you. But because for me, my little journey was a little bit more, I'd say, labor intensive. It was, discovering myself as a trader. It was being willing to stay open-minded and go through all these different, educational journeys. And so I really didn't start embracing automation until probably like 2017, 18. And that was when I was more and more confident in my strategies, when I was more and more confident in what I was trading. Some of my best trading years have been still to this day, like performance-wise, profit-wise, and percentage-wise, have still been from manual trades. And I'll explain why. I'm going to go into my live accounts and show you some of my trades that I'm in right now and what I plan to do with a lot of these positions and some of the chunks I expect to make from them. But some of my best trading years, again, I've automated my trading for the last 2 to 3 years in bits and pieces, but I've been trading for, well over a decade. But I think it's important that if you do want to start incorporating automation in any way, shape, or form, that you have to be confident in the process. You have to be confident in what that strategy is in order to automate it. Because if you're just buying automation that you can see out there on the internet, if you go into a forum and somebody's passing you an expert advisor that you can just download, whether it's a source code or not, you can get a free robot. You can test it, see that it works. You trade on a couple of settings, maybe tweak it a little bit, but you don't know what that thing does. You don't know what built it. You don't know what it really is supposed to do. You don't know how to optimize it. So again, trade what you like and automate what you like. I think that's what helped me build better systems and strategies. I was building specific strategies for conditions. I knew that as a trend trader, I was not the greatest trend trader. My bread and butter was tops, bottoms, overbought, oversold conditions, divergence, and price patterns. That's what I was really good at trading. And so what I discovered was I was really good at finding those levels, trading those little price patterns and tops and bottoms, but then I was not taking advantage of the follow-throughs. I was getting these tops, these bottoms, taking some really nice trades, but I was missing out on like tens of thousands of dollars based on continuation. And so my first dabbling into automation was about improving my weaknesses. I knew that I was not a continuation type trader. I was not a great follow through, keep participating, trade the trend as long as you can and trade the trend until it ends. I wasn't that trader. And so I was building systems that were improving my weaknesses. So I can find the top and the bottom. I can trade the price pattern that I've been trading for years. And then once my trades are going, I take my little manual chunks of profit, and then I can release some robots out there to start staying in the markets for me and keep participating. As long as it stays in a buy zone, it keeps buying. As long as it stays in a sell zone, it keeps selling. So that was what I started with automation. And then, fast forward a couple of years, I've built more automation around what I do well. So I'm building robots now that it's essentially me automated, which is super helpful because now I don't have to be in front of my charts unless I want to be. And I've also, kind of built robots, like I said, to improve those weaknesses and my shortcomings and also my strengths. So now my strengths are trading tops and bottoms, trading support resistance levels, trading trend lines, trading breakouts. Any condition I can find that's consistent, I can now automate it. So I have some systems for that, which are super helpful. If you want to learn more on that, then leave me comments, right? Leave me a comment, Chris. I want to learn more about your automated strategies. What do you have out there? Can you show us what you trade? I mean, there's probably 3 or 4 of my favorite strategies that have been improving my weaknesses, or now just kind of me automated that I can do a lot of planning with it, and there's a lot of steps to it, but it is essentially me trading, and I don't ever have to be in front of my computer to place a trade, which is really my favorite because I'm confident in how I'm trading. Now I can have something that automatically executes for me, so that keeps me very consistent with my decision making, and all I have to do is find a good trade, have good risk management, and place a trade. Learning from both wins and losses. This is really important because typically what I see traders do is everyone's happy when they're winning, right? Nobody thinks about, when you're winning, everything's good. But most traders will dwell and obsess over their losses because the reality is most traders take some massive losses. Most traders will end up losing, maybe all of their money if they start out and they blow up their first account or whatever, right? So blown up accounts, big losses, massive holes in equity, that can happen. But people tend to dwell and obsess on the losses instead of, okay, well, let's say you had at least a string of successive trades, right? Let's say you had a winning streak. Well, what did you do? Like, what was it about that scenario? What was it about that environment that helped you win? If it was a particular strategy you were trading, what was it about those conditions at that time that allowed that strategy to be successful? And I think the reason that that's so important is to not only, improve your weaknesses, but to focus on your strengths. Because what you're doing well, what you're having success with, what you're profiting from, you can identify that environment and take that environment and look for it everywhere, right? I said this in the first video. The markets do the same thing over and over again with little nuances, little subtleties, little differences. But the markets will do the same thing over and over. So if you can identify what helped you be successful, it's just trying to harness that and apply that into the same conditions elsewhere. Maybe it's a different instrument. Maybe it's a different stock. Maybe it's a different company. Maybe it's a different Forex pair. Maybe you can take that same environment. So if it was, identifying, like I said, tops, bottoms, okay, what are you doing to identify those tops and bottoms? Well, you're probably looking at bigger time frames. You're probably looking at major support resistance levels, and you're probably looking for price patterns. Well, cool. You can look at a bunch of different instruments, and you can identify price patterns, tops, bottoms, overbought, oversold conditions, highs, lows, all over the place, right? If it was, I made a lot of money with a system that was a trend-based system, know the behaviors of the strategies you trade. Know the conditions in which it does well. Because I've seen a lot of traders, buy the next shiny object and buy these courses and strategies, and it's a great strategy, and it actually performs really, really well. But you deploy it in the wrong environment. You can't expect a trend system to make a lot of money when the market's going sideways. And you can't expect a range system to do really well when the market is trending, right? So know the strategy that you're deploying and know the conditions in which it operates. So the wins are important. What was it that helped you be successful? And focus on that and look for it everywhere and exploit that consistency. And then, of course, yes, learn from the losses. But my concern is if you spend a lot of time trying to avoid losses, if you spend a lot of time, trying to do everything in your power to never take losses, all you're going to do is end up taking a huge loss at some point. Or you're going to make, a loss you really can't come back from. Because as hard as it is to tell you this, and as hard as it is to drive this point home, this is probably the best advice I can give a trader. Trade small, and it's okay. It's okay to take losses. Right? It sucks. I hate taking losses. I never like closing a losing trade because the money's gone. Right? When you close out for a loss, the money's gone. But if you can still survive that loss and just take it on the chin, brush it off, go find another trade, you survive. you live to trade another day, you go find another setup, and you forget about it. You know, the emotional hurdle that comes with big losses, it's all about risk and trade size. So, you know, to me, a big step in the right direction was trading smaller, being more conservative, and having the patience to let trades play out. You know, if this is where I see the trade going, if it's down here at support and I want to take it up to resistance, then I'm buying this area and I'm working this area. I'm trading really small. I can add to my winning positions and it goes up to resistance. That's my plan. As long as it doesn't invalidate this too dramatically, I can stay in the trade. I can add to my winning position as price is proving that it's going my way. Okay? So, yes, we're going to learn from losses. Okay? But if your losses are massive, it really just boils down to you taking responsibility for your risk management, you know, and trading smaller and having a little bit more patience and letting trades work. On the flip side, with wins, you have to learn from those wins as well. It's really important you focus on what you're being successful at. Okay, so yes, keep doing what you're doing if you're making money. Keep doing what you're doing if you are, you know, a great trader in this environment or for this particular strategy or this instrument. That's awesome. Keep doing it, right? But learn from both wins and losses because we're always evolving. You know, I think every year to me, every year for the last decade has been a new challenge. No market's the same. You know, some markets it's super simple to trade, super easy to trade. All the conditions are right. All you have to do is press the button and things go your way. The other time, it's like you are grinding out, you're watching, you know, flat profits and nothing's really happening. You win some, you lose some, and you have to figure out how to get through that plateau. We're always going to be challenged by these markets, right? But that's why we're here. You know, it's if it was easy, then everybody would do it and everybody would be successful. And that's part of what's scaring me about the current environment is everybody's having some success, which is awesome. I'm super happy for all the traders that are doing it and getting involved and wanting to learn how to trade. But here I am, you know, trying to emphasize why education and some reality and expectations are really important. Okay, tracking performance, that's another thing I'll show. There are some free websites out there, especially for Forex traders. There's something called My FX Book. You can just link up an account, whether it's a demo account or a real account. You can, you know, link it up and show what your track record is. You can show how the accounts have been from start to finish, what's your average win size in dollars and percents, what's your win-loss ratio, what your current trades are doing. You know, you can look at past history to see what the growth is from pips to profits. So My FX Book is a great way for Forex traders. I'm sure there are journals out there for stock traders as well, or just keep track of your P&L. You know, most brokers now give you a pretty detailed level of, you know, starting capital, profits, losses, anything like that. I mean, just metrics, right? I mean, it's trading is black and white. You're either making money or you're not. And if you're making money, keep doing it. You know, how can you make more of it? Right? That's the challenge. If we're making money, how do we make more of it? Right? And if we're losing money, how do we stop losing money? If we're losing money, how do we figure out how to, you know, cut those losses off or improve the losses and figure out how to turn the corner, reach that tipping point, and make some money? Okay, so let's do this. I'm going to go into some of those helpful links. I'll start out, I'll tell a story about this little profit calculator, go into a compound calculator to get some perspective on like a year worth of trading, and let's get like a 3-year plan. Let's get a 5-year plan. You know, if I had any trader come to me asking for help, you know, again, I go back to what I said in video 1, like setting expectations. If you're in it right now, like I'm trying to make as much money as I can right now, but you have no foundation, no education, it's going to be luck. And, you know, in certain environments, luck is good. In certain environments, greed is good. In certain environments, trading is really, really simple and it rewards virtually everybody. But that's not every environment. And most of the time, the markets are going to win. If you're not prepared and you're not savvy and you have no proficiency, this isn't something that just happens to everybody to just get lucky and make a fortune. Okay? So, I think you owe it to yourself to have a foundation, owe it to yourself to have some education. But again, it doesn't matter how old you are. It doesn't matter what your trading experience is. You know, I have traders that I work with that are full-time traders. I have traders that I work with that have never seen a chart before. You know, I welcome that. That's my challenge, is to help you accelerate that learning curve. So, all right, let's do this. I'm going to go ahead and drag over one of the first tools that I was ever shown, and it got me super excited about trading. All right, so this is actually a Forex calculator. And this is using, and I got this originally, it was a $10,000 starting account. The leverage was 10%. And I'll explain what this means. So $10,000 starting balance, leverage 10%. The PIP target, so PIP is a percentage in point. That is really what you're trading in the Forex market. So we go from, let's say the euro dollar goes from 1.20 or $1.20 and then runs up to 1.21 or $1.21. Now that is 1 cent, right? But in pips in Forex, that's actually 100 pips, and that can pay really, really well. 100 pips is a big move. 1,000 pips is a huge move. Okay, so I did this when I first was shown this. This was, crazy amounts of leverage. Pip targets were 20 pips a day. This is what the guy taught me. Here's what I'm gonna do. He called me Pulvy. Pulvy, here's what I'm gonna do. We're gonna make our strategy is gonna do this. We're gonna buy at the zeros. We're going after 20 pips. If we're up plus 10, move your stop to break even. Really simple trade. 20 pip risk, 20 pip reward. Try to get to break even at least 10 or 15 pips in the profit. So 20 pips a day, right? 20 pips a day. You make 20 pips a day, you change your life. He said it, and I'll show you the numbers. Look, 20 pips a day, and I know this is based on 10% leverage. I'm going to scale this down. I'll show you why. But when I was first shown this, this is all I looked at. Okay, 20 pips a day, 20 pips a day, 20 pips a day. Watch what this adds up to be after 1 year. Again, $10,000 starter, right? $10,000, you go through the first year of trading. You turn $10,000 into almost $500,000. 20 pips a day. So of course I want to be a trader. Of course I want to do this. Of course I want to make 20 pips a day. But then it comes to the reality. I have a $10,000 account. If I'm up to, $10,700, number one, I didn't have a $10,000 account. That's number one. I had about $2,500. Okay, so the first thing I did with this calculator was, well, here's what I'm going to trade. I scraped together some money. I had $2,500. Now, I left it as is, 20 pips a day. That's my strategy. Let me see what I can turn $2,500 into after 1 year. Process, 20 pips a day. Okay, look at this first year. $2,500, nearly $100,000 after 1 year. Of course I want to be a trader. Of course I want to make 20 pips a day. But is it that easy? Yeah, it's 20 pips a day, but of course this doesn't show any losses. This shows that you're making 20 pips a day net. You can win some, lose some, but you got to win the day every single day for the entire year, right? Obviously, I mean the expectation is sure that'd be amazing. Let's turn $2,500 into 100 grand. Awesome. Everyone's excited about it, but it wasn't that easy for me. So I did scale this back. All right, I scaled this down. I'm like, well, I was a little uncomfortable with my, $2,500. I was trading a mini lot, right? So here's my daily earnings, about 20 bucks. Okay, mini lot, 20 bucks. Now, what's interesting is I was actually trading more than that. At the time, I was using a broker that offered 100 to 1 leverage, and I was trading, $5 a pip, $10 a pip. And so my 20 pips ended up being like $200, right? To $100. But I lost. I took some losses, and psychologically that messed with me. And so here's the good thing. Let's fast forward about 6 to 8 months. This little strategy that I traded, it still works today. I guess I'm a little bit more comprehensive. But does it still work? Sure. Is volatility the same as it was 12 to 13 years ago? Not even close. But the premise is, do you have a process that works? And so what this calculator means to me is this. If I can just make 100 pips a week. Hell, let's make 10 pips a day. Let's say, if I could do 10 pips a day, to me, that's the same as can I make 50 pips a week? And if you're out there and you've seen anything in the Forex market, again, this is a Forex profit calculator. If you've seen the Forex market, there are 28 currency pairs that are majors and crosses to trade. Margins are fairly inexpensive. Volatility is decent. Sometimes we have super low volatility and other times we have high volatility. But 10 pips a day, can I find a good trade in my week? Can I find one good trade to give me 50 pips? And yes, I can. And so that was really, after just having, some success with this and getting to the point where, man, I'm trading a standard lot with a $5,000 account. I'm trading a standard lot or 2 standard lots with an $8,000 account. I mean, I was getting really nervous with like every time I pressed the button, especially if I had a day of losses the day before, I would lose $200 to $400 to $600 a day on losses. Okay. Now, again, it's part of the game, but I wasn't psychologically prepared for that. So, I grew my account from 2,500 to nearly 10. It took some time. But what I started to do is this. I started to scale back the expectations. I started to reduce my trade size. And I started to look at it from, okay, do I need to make 10 pips today? Because what if I don't like the trade? When I started to realize that support resistance mean a lot, when I started to realize that the market responds at certain levels that you can actually plan and forecast, that was a lot easier way to make 10 pips. That was a lot easier way to make 50 pips. Versus the market's in the middle of a bunch of garbage and I'm trying to force a trade just because I'm there and I showed up to work. Here I am for 3 hours, all my concentrations on my charts. I got to find a way to trade it. Not really. So once I got over the need to trade every day. It was more about like, how do I make 10 pips for this day? Or like what really helped me was, how do I make 50 pips for the week? How do I make 200 pips for the month? Right? That keeps me on pace. I can still stick with this profit calculator and stay with the process, but it was just kind of giving me more time to find good trades. And that's when I started to notice that my consistency, my success, my wins were a lot better. And maybe that helps you, versus trying to go to the markets every single day and just, I get this question a lot, like, Chris, what would you trade if I want to make 50 pips a day? What would you do? I would say cross your fingers and hope it all works out. It's like, it's just not that easy. It's not that easy, but finding a great trade, if you give me a week, I can find a great trade. If you give me a month, I can definitely find several good trades. So that's my timeline. That's what's helped me go from, day trading and having the wins and losses and having that psychological battle with myself. It's not me in the market. I'm going to win, I'm going to lose. If I stick to the rules and do the same strategy, I'm going to win, I'm going to lose, right? And hopefully I win more than I lose. But mentally, it's like, it was so taxing to have all these successes and everybody's happy. I love making money, to then giving it all back with just frustration. And then you do something stupid, you deviate from your plan, you trade the strategy differently, maybe you double down and take different trade sizes. It's my fault. Like, we do stupid things, right? So that was the story. I mean, I changed it, and I've showed a lot of people this calculator. A lot of people like to use this, but what I did was I scaled this thing down and I turned the leverage way down. So about 6%. Whenever it goes to 1, just keep it super small. Go to 10 pips a day. I mean, go to 5 pips. Can you make 25 pips for the week? Yes. Trade support, resistance, and trend lines. You can see 25 pips bounce all over the place. And you will be waiting, right? Identify that level, see price action, get your 25 pips. It can be done. So there's the process. So if I'm really, really conservative, turn the leverage down, turn the trade size down, lower my price targets, right? Lower my pip targets. What can I do here? I just stay. I take $2,500, and after a year, I turned it into $3,800. Now, obviously, not a lot of people get excited about this, but this to me was what real trading was. This to me was real expectations. So did I make more? Yeah, I did make more. I mean, I was actually ahead of this process, which I'm happy with. So, if I do the same thing, I mean, look at how the leverage now starts to change. The trade size finally goes up after an entire year. Then you go from, in 2 years, you take $2,500 and turn it into $5,800. Nobody's excited about this. Now, what I could do is this. Can I make 25 pips a week? Sure. Yes. If I can make, how about 10? Can I make 50 pips a week? Let's see the difference. After 1 year, what do we do? 2,500 after a year, we're up to almost $6,000. Okay, what about the next year? Now we're talking, look at how much that adds up. In 2 years, you take $2,500 and you turn it into 17. Okay, let's take that 17. I'll go 2 more years out. Okay, and then, this is why I talk about perspective. I'm going to take $17,000 and stick to the exact same metrics. Okay, 17 grand. Low leverage, low pip targets, low expectations. And this is good because low expectations means you can reach those goals. You can surpass those goals. So 17 grand, you're now in year 3 and year 4. Let's see where you're at. Year 3 and year 4, you're talking about being at almost 50 grand, right? You're at 53,000 after year 3. How about year 4? Now you're a trader. Now you're talking about some legitimate income. 4 years into this, same process, same 50 pips a week, and you're nearly making $1,000 a day, right? Same process. So that was my little story with the profit calculator. Now, what I'd like to do is go to one more thing. Let's talk about this guy. Give me 1 second. Here is a compound interest calculator. So for all my stock portfolios out there, right? Who out there is trading stocks? What's your percent? Now look, I'm lowering the expectations. The average return for the US markets year over year. Okay, this is not including taxes. This is not including compounding gains. This is just the average return. So the rate of return is around 7.7% for the S&P 500. If you did nothing more than you just kept your money, did nothing with it, and you held it, 7.7%. So let's round it up. Let's round it up to 8. So we'll say that we have, okay, let's start with $2,500. $2,500. Okay, now do you think 8% a year is going to grow into like millions and millions of dollars? It's going to take some time, right? So in stocks, I mean, typically it takes a little bit more capital to make some money. Okay, options is a much riskier bet. Options you can leverage. Options are, I mean, they have the ability with implied volatility. You can have options contract appreciate a ton, and you can look at, triple digit gains in options contracts. But there's always pros and cons. There's trade-offs. You have to find the right time. You have to find the right volatility. You have to find the right price. Is the price going to move? Are you looking at a directional bias option where it has to move bullish or it has to move bearish? Or do you trade a more sophisticated strategy, which is like straddling and bull call spreads and stuff like that, where you can make money if it's up, down, or sideways? You can kind of hedge your bets and calculate your risk. There's a lot of ways to trade options. But let's just talk about this. $2,500, what's your contribution? Okay, let's say that, and this is where things come up like Stash, Acorn, all these little apps out there that now they're attached to your debit cards. If you swipe money for coffee, that rounds up to your Stash account, and you can buy partial shares in Amazon or Apple or whatever big blue chip stocks. So let's say that your contribution is $50 a month, right? And let's do this for the next 10 years. Let's say you did nothing but you still work. You just go to the coffee store, go to the sandwich shop, and your roundup adds up to $50 a month, and you do this for the next 10 years with an average return of what the market offers, which is around 8%. Estimated interest rate will go 8. Okay, let's say that there's a variance of 3%. So on the low side, we're going to make 5%. On the high side, we're going to make 11%. Let's see where we're at. Okay, and we're going to compound this annually. Let's calculate it. So in 10 years, in 10 years, you're going to turn $2,500 into $14,000. Now, the high side, you're at 17, and the low side, you're at 11. Now, what are you going to do to change that? Okay, well, look, you're here for a reason. If you're here to have some education, establish foundation, look, having an active hand in your own financial future and becoming a trader, you can beat the market. 8%, you can beat the market. Okay, my job every year is to beat the market. If the market was producing, like 2020 was a crazy year, the market produced, 15 to 16%. I was right on pace with that. I beat the Dow Jones. I stayed on pace with the S&P. I did not beat the NASDAQ. The NASDAQ had a stellar year. It was like 26% for the year. After a 40% decline, 60% rally, the NASDAQ was up like 20%. I didn't beat it. Okay, but I beat the S&P, or matched the S&P. I beat the Dow Jones. I beat the Nikkei 225, and I also beat the Barclay Hedge Fund Index. That's what I did. So I'm happy with that. And that's my benchmark every year. So let's say, let's bump this up. Let's say, you're going to keep working. You're going to contribute more. You're going to be more aggressive with those savings. You care about your investment. Rather than spending it on something that you don't need, contribute to your financial future. Be an investor. Be a saver, right? So we can still have our $2,500. Let's say that we're going to find a way to say that, I don't know, let's make $2,000 a month. Find a way your job pays $24,000 a year. Okay, we can bump it up, but let's say like bare minimum, low expectations, 24. Can you come up with $100 a month? $100 a month and do this for the next 10 years? Sure. Are you going to make more money eventually? Does this grow in capital? Of course. It grows, it compounds. So length of time, $100. Okay, let's put in $100. Let's do this for 10 years, and let's go. Let's say that the times are good. Let's say the times are good. We can average 10%, and we can have a fluctuation of 5. So either on the low side 5% or the high side 15%, we'll compound it and calculate it annually. So now our $2,500, but we're contributing more. We're contributing $100 a month, and we're doing it with a slightly better. Again, it's really just staying on pace with the markets. Okay, you can take $2,500, and in 10 years you turn that into $34,000. That's on the high side with about 15% a year. Okay, if it's truly at 10%, you're going to be at 25K. Now, all you've done, you haven't traded anything. You're literally just sitting in the US index. That's it. You're not trading, right? You don't have to invest. There's no sophistication here, but it still makes money. Provided the markets go up, provided there's yield, everything's good. But there will be times where you are flat. There will be times in the stock market that you are not making money. And so if you become a trader and you know how you can buy low and sell high and you can trade, right? Now we can say, let's be consistent. The stock market will have flat years. In good years, it will go probably 20 to 25%. And that will balance out the years it does nothing. But if we can consistently make that 10%, if we can consistently make that 20%, let's take a look. Let's go. I want to go interest rate. Estimated interest rate. Yeah, we'll go 20%. That's fine. And high side 25, low side 20 or 15. Let's calculate that. Okay. Now our upside is 63. Okay. Median is 46. Low side is 34. So compound calculator, Buffett said it. Compound calculator is the greatest thing ever. It is. Now, you can make this really exciting. Go to the website. I'll share the link in the description. Go to this website, put in what capital you think is realistic, and see where you're going to be. So this is where I plan. My account right now, if I'm looking at a plan, I'm talking about, a 6-figure account If I'm doing the same thing where I'm contributing, I have a 401k, I'm contributing in my account, I'm adding savings, I'm like, intentionally allocating every single month. But again, I'll be conservative. Okay, let's say that I add an extra 500 bucks. I max it out, anywhere from 6 to 10 grand a year. I'll max it out. Okay, length and time. Let's say what can I do with 100 grand? 100 grand over the next 10 years, and I'm going to lower this. I'm going to say I can beat the market, at least stay on pace with it at 10%. Variance of 2. High side 12%, low side 8%. Compound it. Okay, on the high side, I'll have my 100K up to $415,000 in 10 years. Is that enough to retire on? No, but that's certainly enough capital that I can do more damage with that. Doing the same thing, making 10%, 12%, 15% on 400 grand, that's good savings. Is it gonna help me quit my job? No, I'll still work, but can I beat the markets? Yes. So this is the reality for me. This is like the slow play. Now I can sit here and you can do the same thing. You can take all these numbers, you can make them as big as you want. You can say like, what, last year I made 100% of my account. Cool, but do it year over year. Every single year, show me you can make 100%. That's a lot of risk you got to take. So I look at this from the long term. All right. A couple more things. What else are we going to talk about here? So last little step here is trades, live trades. Now, I know I'm going a little bit long for this one, but I'd like to go and actually walk you through. This is going to be what leads me to my next video, which is going to be managing drawdowns and managing bad trades. Now, I'm not saying that I'm in bad trades, but what I'm going to show you are some of my trades here. This is my one of my Forex accounts, and I have some trades that I'd like to walk through. The reason I like to show Forex a lot in some of these videos is because if you want to learn how to trade, if you want to learn the technicals and the ins and outs of price action, Forex will make you a much more savvy trader. I've become a much stronger, much better stock trader because I learned how to trade Forex, because I learned how to trade price action. Forex is an excellent market to learn. It is a savage market when it comes to, the expectations of having 3-to-1 and 5-to-1 reward to risk is slim to none. But it's a great market, and it's a trader's market, and I grind out pips every single year, and I love it. And again, it keeps me humble, it keeps me challenged, but it's made me a much better trader. And getting into cryptocurrencies was not a problem. Getting into stocks, it made me a far better stock trader, where I could recognize like where the conditions are at, what the technicals are, where the warning signs are at. I can time the market better, right? Everyone says, all the brainiacs, all the talking heads will say like, normal retail traders can't time the market. Right. Normal retail traders that have no idea what they're doing can't time the market. But if you learn how to trade, you can. You can learn how when we're overstretched for 12 years, eventually we're going to come back down. So what are we doing as it keeps going and overstretching? The melt up goes, you protect your profits. But you don't give it back, like you don't let your profits go down and say like, well, that's just the market. I'm going to deal with it and hopefully it goes up higher. It could take years to get back to where it was. 2020 was an anomaly that we went down so fast and went up so much faster. It was insane. But is that always going to happen? No. So anyway, let's go to this. This is some of the positions that I have running. Here's one of my accounts right here that I'm looking after, and I will show you where I'm at. So this is my broker is Owanda. If you have any, if you want more information on broker stuff and how to trade Forex, I would highly recommend. It's inside I'll put the description here. There's a firm I work with called Forest Park FX. They do an amazing job, and they will get you lined up with any broker you want. They offer programs like you can have rebates. So when you trade and you pay a commission, some of that is reduced and given back to you. So about 25% of your commissions they give it back to you in a rebate. You can also have a VPS that allows you to trade automation or have remote access, so you don't always have to be in front of your computer. And yeah, it's really just business oriented. It's just business oriented trading, like better bottom line for my spreads and commissions, and better permissions to trade, and work with a broker that treats you well and gives you continuity. Don't let a broker make trading more difficult. Trading's hard enough. So find a broker that takes care of you, leaves you alone, and lets you do your job, which is trade. Okay, so some of my positions. So this is what I have right here. Check this out. My position tab. This is all of my trades that I'm in. So full exposure right now, I have 1, 2, 3, 4, 5, 6, 7 on CAD Swiss, 8, 9, 10. I'm in 10 currency pairs with little tiny trades. So let's go through a couple of them. Euro Swiss. This trade is like, it's a journey, it's a battle, but here's what it is. So I am in this Euro Swiss, and here's my plan. So my break even is where this blue line is right here. So I'm upside down a few dollars on this one. My break even is around 109.29. Now look at my plan. I'll tell you. I'm going to do nothing on this currency pair right now other than wait, because if it goes up, I've got profit levels up to around 1.12. So that's really my destination for when I close this trade. In the interim, if this price does nothing, I'm not going to do anything. If price comes down to this level or this level, which are major support levels, I'm going to look to buy more. And I'm going to buy small, and I'm going to keep participating in this trade. And longer term, there's a large trend line right here, and we're starting to break it. So the reason I'm holding long is because I started to buy in this area. I started to buy in this area right here. I was buying as it was falling, expecting there to be some type of correction. Now we have this move here, and I did take a lot of profit last year on this move to the upside. Now I'm still holding some positions, and I'm still looking for this to rally back up towards this high and this past support to become resistance. So my destination is 1.1050, which is this high, and it's also this support level at 1.12. So what am I doing right now? Even though I'm upside down on a few bucks, I'm not doing anything. I'm just going to wait. If this price goes sideways and eventually breaks and goes higher, I will take profit up here. And so right now on my Euro Swiss, I am investing. I am investing in this currency pair, and I will buy more down here. I will buy more down here, and I will maintain my position until this thing bounces back up and finds my profit levels. Okay, so that's one particular setup. Dollar CAD. This one's pretty fresh over the last month or so. I like this trade a lot, actually. Same thing. We have some major support right over here. Okay, we have some major support right over here. So right now, I'm currently upside down about $400. Does that mean I'm going to get out of the trade? No, I'm not going to get out of the trade. I'll wait. Okay, I'll wait. So what I'm looking to do on this trade is if we start breaking, and I'm just going to use a trend line here. If we start breaking this trend line, that's not working very well. I'll use the chart trend line. If we start breaking this trend line right here, okay, then that's what I'm going to use. So you can see that price has already started to break and penetrate the trend line. Okay, so what am I doing on dollar CAD right now? Nothing. Okay, where was that previous level of support? Over here. So here is my horizontal level that I'm looking for. And again, what are you going to get from lessons like this? This is application. You know, I think this is important to show. Like, I could be just a guy up here just talking about like, oh yeah, trading, it's so easy, it's so this. Or I can show you like, this is what it takes. You know, you've got to have a plan. So my plan is for this trade right now, I'm just sitting. I'm just waiting. If it comes back down to test the lows, if it tests this low, I'm interested in buying some more. Okay, if it comes back down to test the low, I will probably buy some more and see if this wants to go back up. All right, if it comes back down, I'll be waiting for some price to support this. If it's a bullish candle, if it's something that pops up on a lower time frame, like a price pattern, I will look to add some more. What I plan to do on this trade, and I'm gonna change my little drawing tool here. What I plan to do in this trade is when this ends up giving me more evidence that it's going to go bullish, I will start adding to my winning trade. So my goal would be to take this trade not just from current level, but also if it, let's say it comes down to this low right here. Okay, same low. If it starts to go my way, what I'd like to do is add more to this winning position until we hit this level here. And so it's not there yet, right? There's no confirmation that I'm going to be right on this direction yet. But when and if I see some bullishness, I will start looking at some levels to add to my winning trade. So even though I'm down $400 right now, if this ends up turning for me and going my way, I can turn this little $400 drawdown into a maybe $2,000 to $3,000 profit. Okay, so this is why trading small is really important. I don't care about a $400 drawdown on a, what is this account, $400,000? Yeah, so my balance is 411. I don't care about a $400 drawdown. That's nothing, right? That's tiny. Now, I care that it's upside down. I don't want to be wrong, but $400 divided by 400K, I'm risking way, way, way less than 1%. So I'm just sitting on the trade just waiting. But when I'm right and price is proving that I can take some more risk on this trade and add some more to it, I'm hoping to add when it's going my way. So that's essentially what I'm doing. Like I have some trades that are in profit right now. My Aussie CAD's in profit right now. That's fine. My Swiss Yen's in profit right now. My New Zealand CAD's in profit right now. I'll just wait these out. This is another trade that I'm going to add to. I've been patiently waiting on this one. If you've been watching my weekly outlooks, okay, this drawing tool does this every now and then. My weekly outlook, I'm waiting for this to actually start breaking back down into this 8,900 level. So I'm looking at some additional sell trades in here to add to my winning position. and I want to turn this into, right now I'm up about $70. Again, $70, no big deal. But can I turn this, as I step on the gas a little bit, can I turn this into a $2,000, $3,000, $4,000 profit because I'm adding to my winning position and price is actually going my way? Okay, so that, again, I like to show Forex because we have some awesome price action examples. In stocks, I could show you a stock portfolio right now. It's basically, I've already diversified a ton because I have TD Ameritrade, Charles Schwab, which is the same company but different broker platforms, Webull, and I still have some Robinhood, and then Tastyworks. So I'm all over the place with money spaced out. All I'm doing right now in all of my positions that are profitable is I'm running with trailing stop losses. Okay, what I'm doing otherwise is I'm just setting chart alarms and waiting for better levels to buy. So it's more exciting for me to show some of my, my Forex accounts because I'm way more active in Forex than I am in stocks. Stocks is just running and holding some profits, letting the automated, broker do my work, trailing stop losses. Or I'm just waiting for chart alarms to trigger so I can buy better prices. Okay. But anyway, like I said, this is a nice little segue. I know this has been a long video too. If you stayed to the end, leave me a comment, right? Tell me you stayed till the end. I hope it was enough, even though it's 40 minutes. You watched it in bite-sized pieces. It was enough to captivate you and stay engaged, stay entertained, whatever. But let me know. Leave a comment that said, Chris, I stayed to the end. Show me more. Because in the next video, my next lesson, I'm actually going to focus specifically on managing trades. Okay, managing drawdowns, managing a bad position. I'll go through all of my worst case scenarios, all the worst stories I've ever had for my trades that I've been either fortunate to come out unscathed or fortunate to, come out at break even, fortunate to come out with big profits, or, make a mistake. I've had losses too. I've had some big losses, but I didn't quit. I survived and I lived the trade another day. So that's going to be the next video. So like I said, like the video. I appreciate it. Subscribe to the channel. Click the notification bell. Don't forget that on Fridays, we will be doing, let me get to this here. On Fridays, we will be doing my weekly recap live every Friday at 12 noon Eastern time. And here is that slide. Again, follow me on my YouTube channel, youtube.com/Chris Pulver. I'm also streaming that simultaneously on multiple platforms. So facebook.com/Chris Pulver Trading. If you follow me on Instagram, you can send me direct messages at pulver.chris. Twitter is pulverchris. Twitch and TikTok, Chris Pulver Trading. I'm also incorporating LinkedIn. And let me say something. One final disclaimer. I will never ask you for money. Okay? Ever. There is risk in trading. Okay? All this is educational purposes. I have to say that stuff. I will never, ever, ever solicit you for money. So if you ever see a message on social media and it looks like it's from me, it's asking you for money, asking you for credit card information. It is not me. There are tons of scammers, tons of bots out there. I will never ask you for anything like that. So please, report that stuff to me so I can get it taken down. I've already noticed that more imposters are starting to sprinkle up, and they're taking my profile, they're using my name, and it's frustrating because I don't know what really happens other than I have to report it and get it shut down. But please understand that all of this that I'm doing on social media is for free trading education for anybody that wants to learn. So I appreciate the likes. I appreciate the comments. See you all on Fridays. Have a great rest of the day. And thanks for watching. Talk to you soon. Bye.